Hello and welcome to the Real Estate Regroup Show. I am your host, LJ Walker, a real estate investor helping you realize your dreams of owning a home or investing in one. So, I am going to talk about Silicon Valley Bank. I didn't realize that the story, honestly, was going to take up as much speed as it did and would cause such a stir and concern among so many different people. Let me just, for those of you who may be listening to this late or just wanted to know a little backstory, Silicon Valley Bank is a bank that specializes in technology firms, right? Now, from my understanding, they may have also had some mortgage-backed securities. Mortgage-backed securities are bonds, all right? Many of you who know about me know that I invest in mortgage notes, which is different from mortgage-backed securities. Mortgage-backed securities is when you have a group of mortgages, it's a pool of mortgages put together. You have like a certain share with them. As many of you know, the federal government kept increasing the interest rate. So when they do that, the value of the bond goes down. When it comes to mortgage notes, which is what I do, the fact that the federal government increases interest rates, that does not affect the mortgage notes in which I hold. The mortgage notes in which I hold are going to have the same interest rate because I pretty much buy most of the notes that come my way are fixed rate. Okay, so that's number one. Number two is that if I go out and I buy another mortgage note right now, the fact that they are increasing the rate actually is pretty good for me because that means that my payout is going to be higher than the ones I already own. So it doesn't really affect me in a negative way, okay, like it would affect that particular bank and all other banks that found themselves in the same situation. So I just wanted to put that out there and make that distinction. The next thing is some of the companies that were with that bank, I understand that they had way more than $250,000 in the bank. If I'm not mistaken, when you go back a few videos, I'm almost certain that I mentioned that banks only insure up to $250,000. Here's what else I found. And this may not be for every single bank, but in my case, I have more than one business and I put them all in the same bank, but I have like a different account for each company. I found out that me doing that was not a wise thing either, because even though it's separate companies, they group it all together because I own them. So yes, I myself will move some of my money from one company. I will take one company out and find myself. I'm currently looking for another bank to put that money there so that this way, if anything happens, I can always go somewhere and access capital, right? And I'm not sure if a lot of the companies that had more than 250, maybe that was the situation, because business can be very complicated. Some businesses, the way that they are structured, they have like all these different subsidiaries underneath them, which are like separate businesses. So that's why that may have been what happened, because normally you don't put more than 250 in a bank. especially for individuals. But, you know, and then also I know that there are some business banks where 500,000 is the maximum that they're insured. Okay, so just take heed to that in case you are in that situation or not. But even if you don't have 250,000, 500,000, even if you don't have that amount, you still should not keep a large amount of money in one bank. I think that this is something that we all should pay attention to and learn from. Now, I know I had sense enough to know early on that you separate your business account from your personal account. So my personal accounts are in different banks. My business accounts are just in the same bank, just under different accounts. But I know moving forward what I need to do. And hopefully you will learn that lesson too. You don't, some people I understand because of the fear, and a lot of the fear, honestly, it's warranted, but some of it isn't. A lot of people, unfortunately, are putting 20 on 10 so that they can get views and likes and clicks and attention. Okay, but it's, yes, there are banks that are out there that are going under. Yes, you should do your research to find out which ones are and which ones aren't, and then place money appropriately. But no, none of us should have all of our money in one place. And to tell you the truth, this is not the first time that this has happened. Okay, you can go all the way back to the Great Depression. You can go back to the SNL loan crisis that we had in the 90s. You can go back to the quote unquote Great Recession that we had back in 2008. Okay, and what I found that was commonplace is that whenever banks got deregulated, especially as far as how much they should have in reserve, that's when things went haywire. Okay, so for those of you who are new to finance and who may not know what reserve is basically your savings. That's money that we would call your rainy day fund, money that you're not going to touch unless there's an emergency, right? Some people separate emergency from reserve, but they're pretty much honestly the same thing. Okay, so, and even though you may not be a bank, you should have reserve money. You should have emergency money put away just in case anything happens. What happened to me recently is my taxes went up significantly. And thank God I have enough money to pay it. But it is a bit of a stretch or a strain. Why? Because I just repaired the roof and I also redid the bathroom. Okay. And right now, in one of my apartments is empty. So yes, it is a strain on me, but I do have savings. There are places in my budget, there are things that I'm spending money on, rather, that I can cut back on. There are certain subscriptions that I plan on letting go of so I can have more, so I can build up more in my reserve. So we all have to operate the same way. Let's look at this for a minute, calm down with the panicking, take a breather, take a breath, sit down, and look over what you have and see, what you can cut back on, what needs to be cut back on so that you can build up your reserves. Also see, the other thing to pay attention to is we all know that the CEO of that particular bank, he moved all his money out of the bank. He got rid of his holdings. We need to, first of all, I don't think most of us even know who the CEO of our banks are. if you do know, and you're listening to me on YouTube, write it in the comment section. But most Americans, most people in this world don't know who most people in this world don't even know who their bank manager is. Most people in this world don't even really know who their banker is. That has to change. And this right here, I think, is a serious wake-up call. We need to know who they are. We need to follow them wherever they are on social media, if they are on social media. And when we're looking into the news, we need to make an effort to find out, okay, what is our CEO of our bank doing with our money? What is he doing with his money? Because his money is our money. It's a culmination of my money, your money, his money, her money. You understand what I'm saying? And we need to know, okay, wherever they move, we move just like that, if we can. But if they move, meaning if they stop pulling out, and anybody who actually invests in stocks and bonds and what have you, you know that when you're picking a stock or a bond or whatever, particularly stocks though, when you're looking at a stock, you look at the CEO and you look at how much is he holding in that particular company. Because the more he holds, that means that the more he cares about that company. The more he's invested, that's what holding is. The more he's invested in the company, that means he believes in his company. If he don't have that much skin in the game, something's wrong right there. That there should be a flag, either a red flag or a yellow light or proceed with caution sign. Something should come up and say, wait a minute, hold on. You don't invest in your own company? What's going on? What's happening here? Oh, you were invested, but now all of a sudden you moving your money and you taking your money out? Hold up. What's going on? That's what we need to do. That's what we need to do. And it isn't good. I agree with one person who said that, a lot of people are just taking their money out of small banks and putting them into large banks. Why is that not a good idea? That's not a good idea because some of the small banks are actually doing very well. Some of the big banks may be in trouble. Now, yes, the government does look after the big banks because they know that most of the money, not only in this country, but all over the world, are in those banks. So there is some level of protection there. But that doesn't mean that from time to time, someone does not get careless. You understand what I'm saying? So you really keep the lesson in total, keep your eyes on your own money. All right. And that means keep your mind on your business. Right. That's basically the real overall lesson in this particular situation. All right. I don't want people to be so panicked, and I don't like seeing that so much, to be quite honest with you. I just feel like you gotta take a breath, sit down, and be reasonable. And then, of course, with me, my whole thing is, and if you haven't gotten this from the other videos that I've made, I prefer to be my own bank because this way I have more control over what's going on. I can see, I know where my money is. And by buying mortgage notes, you're getting it, especially if it's performing, you're getting a check every month. And if you don't get the check, then you figure out, okay, why am I not getting the check? I have courses, by the way, on www.propertyphasellc.com if anybody's interested in learning more. But basically, I buy mortgage notes. I am my own bank to a certain extent. And my money is actually not secured by the FDIC. My money is secured by the real estate that my note is in. And if anything negative happens to the real estate that my note is in, that my money has paid for, there is something called insurance. And that means that if the property was $750,000, or if the property goes up to $1 million, I'm secured for that amount of money, not no 250 and not no 500,000. Even though, watch this, I didn't pay 750 or $1 million, but because the value of the property increased to that amount, I am secured to that amount. So, anyway, that's my 2 cents on this particular issue. Oh, and also let me add this real quick. Someone also said that history doesn't repeat itself. I disagree. History does repeat itself. If you go back to the Depression, the S&L loan crisis, and now, yes, there hasn't been the number of banks that are having some issues right now compared to back then. Back then, it was way more banks than right now, okay? But here's the other situation. The bank, when they are deregulated, that's when the problems have always occurred, right? And I mentioned that's why we need to have money in reserves, correct? Then we should also look at, mortgage-backed securities, going back to that. That says that we need to be careful for those of you who do invest in mortgage-backed securities, who do invest in the stock market and bonds and etc. Just look, there is a pattern, and we need to look at the pattern of what's going on. The other thing is this, the United States government, they may let a few banks go under, but they will do their most not to have a bank go under. They will do their most not to have a bank go over. And then there are certain banks that they really, really, really will try not to have those fall. Because if those fall, that affects so many different people. And they don't want to repeat the Great Depression again, which is another reason why being the bank is better than relying on another bank to secure your bag, to hold your bag, to hold your money. Okay, so now my 2 cents is finished. I hope you guys will take what I say, apply it. I hope you will also share this amongst your friends, because each one, reach one, teach one. Bye for now. Until next time, have a good night.